So Ola Electric is going to list in the markets next week. Ola Electric is planning to raise 5,500 crores from the IPO. The price band of the shares will be between 72 rupees and 75 rupees, and it will get listed on August 9th. Ola Electric incurred a loss of 1400 crores in the last fiscal year, and in the recent RHP they said they will continue to make losses even after the IPO. I believe their exact terms were, we may continue to incur operating losses in the near term as well as we invest in our businesses and expand our product portfolio, build capacity and scale our operations. If they themselves are saying that they cannot make any profits, then who in sane mind would invest in their company? No one wants to invest in loss-making companies, neither you or neither me. But there is a catch here. If you want to invest in company just on the basis of financials, then you might miss some early opportunities. To understand what I mean here, let's zoom out a little bit. First, to evaluate any company before we invest in, we have to see which market segment it is in. Ola Electric is in EV segment, that is electric vehicle segment. So let's look at the overall EV sales for the past 5 years. There is a dramatic increase in 2023. Almost 4 times more EV vehicles have been sold last year. Also, a new segment called electric 3 vehicle segment has been added in 2023. And this segment seems to grow very rapidly than other 2 segments. These are your regular auto rickshaws and goods carriers. These seems to grow in a very rapid pace. Very interesting. Anywho, there seems to be a lot of demand for EV vehicles in India, and the numbers are expected to grow. So the market segment is checked. Next, let's see the market composition of EV segment in India. This is for two-wheeler segment. Ola Electric is market leader in this segment. Almost 40% of market share is near Ola Electric, followed by the Hero and TVS. By this, we can certainly conclude that Ola Electric vehicles are top choice for consumers in India. Okay, let's drill down further. Let's see what products Ola Electric is offering, what are their flagship products, and how they are compared to the competition and their petrol counterparts. According to their website, the 3 main Ola Electric vehicles are Ola S1X costs 75,000, the Ola S1 Air costs just over a lakh, and the Ola S1 Pro, which is their flagship product and most advanced product, cost 1,28,000. Now let's compare this with other companies' product. So I'm just comparing the premium models of each company here, and purely on affordability basis, Ola Electric loses points here because it is the most expensive product in the market. When we compare this to Hero Electric, it is the most affordable vehicle that is there in the market. So if you are on a tight budget, then Hero Electric vehicles might be your best choice. Moving on to the performance and the features of these bikes. Here is the comparison table of flagship products of different companies. Let's spend some time here. In terms of range, Ola S1 Pro tops the list. 181 km is a very big deal, and it has a top speed of 115 kmph, and rest of the bikes are under 100 kmph. Ather seems to be pretty close here, but hands down, Ola wins for speed. For battery, Ola wins again, but Okinawa's battery is pretty comparable in the capacity, which is great for Okinawa, but its top speed is 58 kmph, which is a big turn off here. Last but not the least, the charging time. The charging time for Ola Electric is highest. Maybe it is because of the battery capacity, but Okinawa's battery is pretty comparable to Ola, and their charging time is less than 5 hours. So Ola's 6 hours charging time is not acceptable. So Ola loses a point here. So in overall, I think Ola is killing in the two-wheeler EV segment except for their charging times. Now let's compare Ola's electric bike with any petrol or diesel counterparts. In Ola Electric website, I found a really cool calculator which can be used to compare the internal combustion engine like your Activas, etc. to Ola EVs. The comparison is based on 3 parameters such as fixed cost. Here is the EMI or the cost of the vehicle, the maintenance such as service costs, etc., and the running cost, which is your fuel cost. Though the initial fixed cost is more for EV scooters, the maintenance and running costs are pretty low for EVs, and you will also be saving environment. You can play around this calculator. It is in the Ola Electric website. Moving on. The Ola Electric follows a business strategy called vertical integration. Vertical integration involves taking control over multiple steps in the supply chain, from raw materials to manufacturing to distribution and even the retail. There are two types of vertical integrations: forward integration and backward integration. In forward integration, this is when the company takes control over the distribution and retail aspects of the products. For example, the manufacturer opening its own retail store, etc. And there is backward integration, where the company takes control of raw materials or suppliers, etc. For example, a car manufacturer acquiring a tire company. Ola Electric does a combination of both. It takes control of both retails, distribution, and also the raw materials, suppliers part, etc. Ola has established Ola Future Factory in Tamil Nadu. It is said to be as the world's largest two-wheeler factory. This is highly automated, aiming to produce 10 million scooters annually. Ola is also investing in battery cell capabilities. Ola also builds their own proprietary software for vehicle management and user interfaces, enhancing the overall user experience. Most importantly, Ola follows a D2C model. D2C sales model involves bypassing the traditional dealership networks. This will not only reduce the cost but also allows Ola to directly interact with customers and get their feedback. Also, one great example of vertical integration and D2C model is Tesla. Tesla also sells vehicles through its own network and websites instead of going to the traditional dealer networks. This model gives maximum control over the product, enhancing the product quality and a quicker feedback loop. Now, every company has lot of risks involved. The Ola Electric has lot of risks involved, but one such risk is battery technology. In any EV vehicle manufacturing, roughly 40% of the cost goes towards battery of the vehicle, and the battery technology is real pain in the back for all the EV manufacturers. As I already emphasized, that battery is the most important and expensive part of any EV vehicle. The largest battery maker is CATL from China. It has close to 40% of the market share and is a monopoly in this segment. At least 4 out of 10 EV vehicles use CATL's batteries. Let's understand the battery basics a little bit. The type of battery that typically goes into EV vehicles is lithium-ion batteries. The 4 main components of the battery cell are cathode, anode, electrolyte solution, and the separator. The cathode is typically made up of nickel, cobalt, and manganese. The anode majorly consists of graphite, and the electrolyte is made up of lithium. And the separator is a crucial component that ensures safety and efficiency of the battery by preventing direct contact between anode and cathode. And it is usually made of polyethylene or polypropylene. Lithium can be considered as most important element in making any battery. Chile and Australia hold 82% of the world's lithium reserves. So what's the problem? One can think that Ola Electric can directly import the lithium and start making batteries here. Well, it's not that easy. You see, it's true that Chile and Australia has most of the lithium reserves, but 90% of those reserves are controlled and managed by China, specifically a company called SQM. That's not the worst part yet. Where China really controls the supply chain of EV batteries is the steps after the mining. No matter who mines all these battery minerals, China refines a vast majority of them. The China has the most advanced manufacturing and refining process of EV batteries that no other place in the world can do as efficiently and as cheaper as China. For other countries to achieve this efficiency, it will take at least a decade, and even after a decade, there is no guarantee that they can replicate the same efficiency and the cost as China does presently. Also, China has been rapidly innovating in battery space. Chinese companies have figured out how to avoid using the most expensive metals in the battery manufacturing: nickel and cobalt. They did it by innovating cathode to lithium iron phosphate, also known as LFP. In 2023, CATL announced LFP battery that could power a car up to 370 miles on just a 10-minute charge. So there is no way other companies, as a matter of fact, other countries cannot compete with China in battery manufacturing and innovation technology. And Ola Electric is no exception. Even though they do all vertical integration, make all the parts, seats, etc., but all the battery components and batteries will be done in China. So if China decides to hike prices or disrupt the supply chain, then it will be a huge risk for Ola Electric. And there are many more risks for Ola Electric, from dependency on government subsidies, regulatory challenges, technological risks, and so on. So my opinion on this IPO, I would not buy the IPO, but I would definitely buy the stock after it gets listed on the exchange. But if someone is looking to make a quick buck just on buying the IPO, then it's not a good option. It's not suitable for short term, it's for long term, at least for 1 to 2 years. Since it's still a loss-making company and has a lot of risk and dependencies. So I hope you liked this analysis, and I hope it will guide you in making the right decision whether to buy this IPO or not. That's it from me today. Thanks for watching. I'll see you in the next. Bye.